Are you tired of staring at noisy charts, getting faked out by endless red and green candles, and constantly second-guessing the true direction of the market? If you're looking for a way to filter out that noise and see trends with crystal clear vision, you are in the right place. In this video, I'm going to introduce you to a game-changing tool, Renko charts. I'll break down exactly what they are, how they differ from standard candles, and most importantly, I'll reveal the specific type of Renko that I personally use in my trading. This is a fundamental lesson that will completely change how you view price action. Let's dive in. What are Renko charts? It's derived from the Japanese word renga, which means brick. These charts help us see trends more clearly by simplifying price movements. They focus on price movement instead of time, and a new brick does not appear unless there is a change for a specific price range. In this way, they provide a clearer view of the market's direction by eliminating unnecessary noise. So, what are the differences between Renko and Japanese candlestick charts? We can mention three main differences. The first is the time factor. In Japanese candlestick charts, each candle represents a certain time interval. What do we do with Japanese charts? We choose a certain time, let's say 1 hour. After 1 hour, a new candle opens. Then it closes, and a new candle opens after another hour. Or let's choose 1 minute. The candles open and close every minute. So it's time-bound here. But when it comes to Renko, there is no such factor as time. We'll get to how it's formed. Our second difference is price movements. In candlestick charts, we can see both the direction of the price and some values of the candles. That is, we can see the opening, closing, highest, and lowest values. But in Renko, we can only see the direction of the price. There are no values like opening, closing, highest, and lowest. So of course we can see some values. For example, when we come to the end of the candlestick, of course, there will be a price shown on the price scale, but we cannot evaluate the opening or closing price by looking at this. We would be mistaken. Yes. The third difference is visuality and noise. Renko charts offer trends in a simpler way by reducing price noise. The main difference in Renko charts is here. Renko charts are a bar type produced to reduce unnecessary noise. But with Japanese candles, this isn't the case. Depending on the time frame we choose or the different product, of course this will vary. There could be unnecessary information clutter here. Why? We have entered a trade. Will it rise here? Will it fall here? Continuously red and green candles, etc. And constantly wicks. Here, an engulfing candle was formed. Should I enter here? A doji was formed here. Should I get out? Is it going to reverse here? Etc., etc. These kinds of information can constantly unsettle you. But there is no such thing in Renko. There are only three things we'll see: a wicky candle, a red candle, and a green candle. Now let's get to the different types of Renko charts. There are three standard Renko chart types. By standard, I mean the types of Renko that are on most platforms. There is also the original Renko chart we'll use, and that is only available on a few platforms, but I use the one on NinjaTrader. I recommend that one to you too. I already showed you how to install it, etc. You can view it in the other lessons. Yes, the first type of Renko is Classic Renko. Classic Renko is the first Renko to come out. It's adjusted according to a certain price range. For example, every 10 pip movement creates a brick. That is, it creates a candle. This pip is in Forex. In futures, it moves in ticks, as you know. So, regardless of the movement, if it moves 10 pips upwards, a brick is created. If it moves downwards, a brick is created then. Dynamic Renko. To briefly mention this, everyone knows the ATR indicator. Our indicator measures volatility. New candles appear based on the ATR calculations in this chart type. Our third chart type is percentage Renko. This is a Renko chart type that measures price movements according to a certain percentage change. For example, let's say 5%. When the price moves 5%, depending on its direction, for instance, if it moves upwards by 5%, then a new brick forms. If you wish, let me show you these on the TradingView platform for your information. Yes, we are in the S&P 500 chart. Let's go to the bar styles at the top. From here, let's press Renko at the bottom. Yes, as you can see, our Renko charts have arrived. What type of Renko chart is this? It says traditional. This is the classic Renko. Let's immediately go into the settings. As you can see, there are three options: measured by ATR and moving with percentage. In the classic one, we can only change the box size. For example, 10 pip. Now we are in the futures market. It moves every 10 ticks. As you can see, let me immediately show the others. There is the one with ATR. the one that changes with percentages. Let's say 5%. The percent 5 is such a big thing. How many candles have been formed since 2020? So percentage isn't very effective. We're not going to use these anyway. Actually, I showed you these just for you to be informed. Let's continue right away. Let's get to our main topic, brick Renko. In Ninja Renko, ninja.co is the name given by the site that produces the bar actually. Other people developed it too, but I use Ninja Renko. Of course, the reason for using it is that it is free at the same time. Yes, brick Renko, unlike classic Renko charts, allows you to analyze the continuation or reversal of a trend in more detail. In this chart type, not only the brick size but also the trend threshold is determined. In classic Renko, we just entered the pip or tick size, we only had one option. Here, we also have a second setting, a filtering setting. What are they? Let's see. Brick size, for instance. It is set to 10 ticks. A new brick will never form unless the price exceeds this value. This is something found in the classical Renko anyway. The part that differentiates us from classic Renko is the trend threshold. In order for the trend to continue, in addition to the brick size, an extra movement that's been set is required. Let's say we have set this value to 2 ticks. So a new candle can only appear if the price moves another 2 ticks over the previous candle. Now, after we have looked at the working mechanism, we'll understand it better. How does the original Renko that we use work? Brick Renko charts do not just go beyond the determined brick size with price movements, but also a certain additional movement in the direction of the trend, or what we call a trend threshold, must be present. This structure is used to measure the strength of the trend and to filter out false signals. We already have 3 scenarios. In the first scenario, there is going upwards or downwards. Our second scenario is a reversal, where price reverses. Our third scenario is additionally the wick. Let's start with our first scenario. For instance, if the price goes up 7 ticks and makes an additional move of +1 tick, a brick that moves upwards will form. We can change the brick size and the trend threshold in the indicator. I will show you all of them. If the price goes up 7 ticks and makes an additional movement of +1 tick, a brick will form that goes up. Let's immediately have a look at the Renko charts. Yes, we have opened our Renko charts. Let me immediately show you the settings. Our box size, our brick size is 7. Our trend threshold is 1. In this case, for a new brick to appear, it needs to move 7 pips, or rather 7 ticks, and also to fulfill the filter. I'll just grab the tick measuring tool from here. For instance, let's measure here. When we get here, our brick size is 7 ticks. That is the box size we chose. But when it became 7 ticks, a new brick did not form. When will it form? Of course, when it becomes 8 ticks. Look, when it was 8 ticks, a new brick has formed. Let's look at the downtrend scenario. From here right away, let's take our tool. How many ticks? 7 ticks. Our brick size is 7 ticks. When does a new brick form? When it is 8 ticks. Yes, at 8 ticks, a new brick is formed. Let's look at the other scenarios right away. Yes, let's get to our second scenario, reversal. After the price has gone up, it needs to move 14 ticks in the opposite direction to form a brick going downwards. Then if it moves 7 + 1 tick in the same direction, new bricks will continue to form. Let's open our charts and I will show it. Let me show the reversal. Here it is already. Our candles are going downwards, and at this candle, as you can see, the trend is reversing. Let's measure the size of this candle. How many ticks does the reverse candle have to be? 14 ticks. So don't let your minds get confused. When you change these values, these also change. For example, we set our settings to 10 to 1, so then for this candle to reverse, it needs to move 20 ticks. When we make it 15 to 1 or 15 to 2, it needs to move 30 ticks for a new brick to appear. Let's measure from here right away. Look, 14 ticks it has formed. Let's have a look at the downside reversal. For example, this place, a good example. I am zooming in so you can view it better. This also has to be 14 ticks. Yes, it has become 14 ticks, and when it moves +1, a new brick has formed. Let's get to our other scenario. Our third scenario is wicks. That is, the tails. If the price moves downwards but turns back upwards without completing a +1 tick extra move, it will appear as a needle, or rather a wick, on our graphs. Let's immediately have a look at this too. We have actually already seen it in the reversal scenario. In reversals, it always leaves a wick. Now let's look at the wick formation during the trend. Let's do it here. Yes, here are good examples. These do not have a stable tick range, as we don't know where it turned back. Actually, we'll see these when we are watching the live graph. So when we see this wick, it means that the price went down that far, but it did not fulfill the necessary rules and turned back upwards, and a new candle formed here. The same here too, here too, here too. I will try to show a live one if it's present. Let's see if one will be created live. It was created a bit earlier. Let's see if it will form here. Look, it is currently moving upwards. Look, it threw a wick and is turning back down. Actually, if it closes downwards, in this case it will fit the wicky candle scenario. During the trend, of course. Yes, the wick we expected has formed. That was a good live example. Let's go to the recommended values and settings of Brick Renko. In these charts, the brick size and trend threshold settings should be adjusted according to the unique movement characteristics of each product. Because every product's volatility level, speed of movement, and range of power is different, these settings help you make a more accurate analysis and make the right decisions. Yes, I gave some of the values that I have been using these days here. In ES and MES, that is micro S&P 500, I use 7 as the brick size, and the trend threshold is 2. Or depending on the speed of the market, I use 10 as the brick size and 3 as the trend threshold. In NQ and MNQ, and if you don't know, MNQ is the micro version of NQ. I want to open a special parenthesis for this NQ. NQ is an extremely fast, extremely liquid product. If you choose the value of 11 to 2 here, for example, if you are entering the market at the opening of the American Stock Exchange, it's so fast that you see a setup. If there is something that fits your strategy, since it moves too fast, either you enter the trade late or you can't enter it, or you enter and get stopped out. It's very volatile. For this reason, I don't recommend trading in NQ at first. After you get some experience in the market and increase your screen time, then you can have a look at NQ. Here, I gave 40 as the brick size and 10 as the trend threshold setting. Actually, this slows down the price movement a bit for NQ. Let me put it this way. If you enter this value, NQ moves in a similar fashion to ES. That is, if we compare their speeds, they move almost the same. So, if you are insistent on opening a trade in NQ, I recommend that you use this setting. I also gave values for GC, that is gold. I don't use gold in the futures market, but I determined these values for you. You can use this value as a starting point. Similarly, 6E. Actually, I don't trade this in the futures market, but you can base yourself on this value as a start. In addition, we have an indicator where we can determine these values according to the movements occurring during the day. It gives these values using the ATR indicator during the day and does some calculations, and it provides 3 settings for us for this Renko. By looking at these values, you can adjust the desired product in a way that suits the market. Let's have a look at this indicator right away. Let's open our NinjaTrader. We are on micro S&P 500. Let's go to the indicators section. TDU Renko Brick Size Calculator. Let's add our charts by double-clicking. Yes, there are some settings here, but I don't recommend that you touch them. I am just setting this 1 to 3. Measure it with a 3-minute base. As I told you, using ATR, it provides these values to us. We have a fast ATR value, medium slow ATR value, and we also have a slow ATR value. Let's apply it from here. Let's add it to our chart. As you can see, some values appear here. Which settings does it recommend for micro S and P 500? 10 thirds, 12 quarters, 19 sixths. Actually, the red one here is our slow ATR. The white in the middle is our medium slow setting, and the gray is our fast setting. Actually, according to today's volatility, our value is too much. Let's change our value here and see. Let's make this at the medium volatility ATR value. We made it 12 to 4. Let's apply. Actually, why does it give 3 values here? For instance, at 26, that is a brick size of 20 and a trend threshold of 6. If we enter this, in the graph we will see more trend movements. We won't often see pullbacks. This actually straightens our chart more. This is both a plus and a minus. Seeing a completely straight chart can cause us to miss intraday opportunities. For this reason, my suggestion is that you choose either the lowest one or the fastest one instead of the highest value. The advantage of this is that you can see the pullbacks and other movements better. Let's immediately go to another product from here. For instance, let's go to NQ. Yes, in NQ, these values did not surprise me because this product is so volatile and so dangerous that the values here are also very high. If you increase these values this much, it tells us that you can only slow down this product. Yes, this indicator was like this. You can use this indicator while analyzing. I recommend it. And that is your complete introduction to the power of Renko charts. We've covered the basics, the different types, and the detailed mechanics of the specific Brick Renko setup we use. Now you have the foundation to start looking at the market in a much cleaner, more logical way. Now, understanding what these charts are is the first step, but the real secret is knowing how to build a complete, profitable strategy around them. This lesson you just watched is actually a free preview from my full trading course, Zero Noise Trading. Inside the course, we go much deeper. I'll teach you my exact entry and exit signals, risk management rules, and how I use these Renko charts to find high probability setups day after day. So if you're serious about taking your trading to the next level and want the full step-by-step system, click the first link in the description below to learn more and enroll in the course. If you found this free lesson valuable, please hit that like button and subscribe for more trading tips. Have any questions about Renko? Drop them in the comments below. Thanks for watching, and I hope to see you inside the course.